Hey folks, so in this video we're going to quickly talk about the reverse repo agreements, how they're going absolutely batshit nuts, and the ramifications of that on the larger sort of macro effects. What this means for Bitcoin: is it going up, is it going down, and my current trades at the moment. So basically, it's not often I look at the overnight RRPs. But I came across this. I had a little look because obviously most of the time, for most of my trading career, overnight RRPs have been pretty much flat, apart from sort of when we had a bit of liquidity issues, around sort of 2018, 2016 time. But very suddenly, we've had overnight repos or reverse repos going absolutely ballistic to the point where the Fed is effectively reining in about $2 trillion worth of funds every single day. And this isn't the video to really go into what this all means. What I want to share in this video is what are the effects of this, okay? Because ultimately that's all we care about. How is this going to affect our trades and investments? I'll have to make another video which goes around the ins and outs. So I wanted to just double check this. So obviously I jumped onto one of the Fed reports, and in this you can scroll down to all the assets and liabilities of commercial banks, and I had a little cross check because sometimes they don't match up for some reason. So I looked at all the loans and leases and banks and credits. So as it stands right now, there's about 11.2 trillion dollars worth of loans. That's from all the commercial banks. And then if you go down to the balance sheet, you look at the liabilities, so deposits. So this is basically money which is deposited onto the bank. So if, let's say, the government gives a whole bunch of furlough stuff or stimmy checks or something like that, that obviously goes into a bank, and so deposits acts as a liability on a bank's balance sheet. Remember, a liability is something that takes money out of your pocket every month, day or year, and our money in our bank accounts is treated as a liability on the banks. So what you can see is that the loan to deposit ratio is a bit out of whack. So they've got 11.2 trillion in loans, but they've got 18.18 trillion in deposits, and that is sort of reconciled over here on this chart. So you can see up until sort of the subprime mortgage collapse, it was pretty much the same, really. Banks, well, it's not the only way they made money, but the banks typically had deposits, and the red line here is loans, and they would always give out less amount of loans than they took in deposits, for collateralized problems. But in the subprime mortgage collapse, basically banks were like, oh shit, we're not going to bother lending to anyone anymore, and therefore they really dropped the amount of loans that they gave out. So this is why it's called the credit crunch or the credit freeze, because whenever you have big sort of calamities in equities, it's the credit markets that always hit first, because the banks basically shut their doors and go, we're not lending to anyone. And this has really been accelerating over the years, and more recently, like if you take sort of March, April time, it was really accelerating. I mean, there was a point where it did look a bit crazy, where the amount of deposits was accelerating and loans were sort of dropping, but it seemed to have sort of leveled. It seems like it's trending back up again, but however, there's a massive disconnect here. So what this ultimately means is now we're seeing a massive crash in stocks. So for example, the S&P 500 has already dropped 20%. The Dow Jones, if we have a look at that, that's already dropped, from top to toe about 17%. The Nasdaq's a bit harder hit. That's about a 31% crash. The FTSE's pretty much flat, but that'll come. So what we're seeing is that all of the indices are now starting to suffer. Now, why is that? Now, there is a chart out there which I should have prepared before this, but basically so if you take the S&P 500, the Dow Jones and the Nasdaq, that's 750 of the biggest companies in the US. Nearly half of those no, more than half of those companies, so over 300, oops, not 325, 375, so over 375 of them are over 60% down in terms of asset prices. So typically what we've had in the lead up to this little push down here is that most of those 750 companies have been crashing big time, but the only reason we don't notice it is because 90% of the volume of all of these big indices is from 6 companies: Facebook, Amazon, Apple, Netflix, Google, Tesla. But now that those big FANG T stocks are now starting to suffer, guess what's happening? So if we look at Facebook, which is now Meta, that's had a 55% drop. Amazon's had roughly, from sort of top to toe, a 46% drop. Apple, that's had about a 26% drop. If we look at Netflix has absolutely shat itself with about a 77% drop. The Goog, about a 32% drop. And then finally we've got Tesla, which has had about a 50% drop off the top of my head here. So now the big boys are starting to wobble, and we've got big sort of people like Elon saying he's expecting a massive recession, in the coming months. Jamie Dimon, the head of JP Morgan, he's saying a massive hurricane is inbound. Like, what tends to happen, all these big companies that do look forward, they tend to stop lending, they shut up shop, so to speak. They pause recruiting, they lay off staff, a bit like Tesla's trying to do at the moment, etc. So there's some sort of hurricane inbound, and most of the people don't realise it. Now, why is this? Well, because of this going nuts, this is actually causing dollar strength. There are my trades. We'll come back to that. So one of the reasons for, you'll see that most of the crashes have happened from April, May time. So sort of this is March, April time. Well, the dollar has been rallying hard since February, April, May time. So remember, anything priced in the dollar is going to crash if the dollar goes up in value. So I've drawn this little circle up here for freaking ages now, because I've said a fair while ago that the dollar index was in some sort of megaphone pattern. Well, if the dollar keeps on making its way up here, then everything is going to tumble. Everything. Stocks, bonds, properties, crypto, everything. And as it looks, I mean, it's looking pretty damn bullish at the moment, if you ask me. There's no signs of, relenting here. So what does this mean? It means stocks are about to fall. It means things are, looking a bit bearish in my opinion. Now, I always put my money where my mouth is. I've got lots of different pots. I've got a little pot here that was 40k, that's now 150. I've just been growing that. 11 grand up today. All I've done is short the Nasdaq, and that should fall down nicely in my opinion. And in terms of crypto, well, obviously everyone's starting to get pretty damn bullish at the moment, but I am still very bearish. If you look, several weeks ago I said that the crypto needed some sort of relief rally back to 32, 34. Well, in fact, it's probably one of my last videos actually. If we go to my videos, sell in May and go away, have a look at this one from 23rd of May. I was basically saying we should have a little pop to the upside. Yeah, you can watch it in your own time. A little pop to the upside and then further falling. So we had it. Now we had this random thing last night, so that caught me out a bit. So I had a few losing trades last night. Probably lost, I don't know, 20, 30 grand, something like that. But what I've been looking for today is a continuation signals, and we've got it across the board. So I've placed a few trades this afternoon. So if you look at Telegram, where I started texting these out. Come on, internet. Oh my god, I can't wait till I have fast internet. Right, I had to pause my video because that took freaking forever. Yeah, so I placed all these trades around 4:20 today, 4:15. And so how they're doing, so yeah, not too bad actually. Yeah, so what I've done is typically when I short, I try and short the shit coins instead of the the blue chips. I know some of them are right, but so for example, Waves has been beautiful for us. We've just shorted Waves for like what it seems like forever, and yeah, we should at least see further falling down to sort of this, somewhere along this level here. So if I draw my little white hole again, so that'll be quite good. Probably get a bit of resistance around here, but we'll see how that goes. Someone asked on one of the other videos why I don't set limits in place. So for example, I could set, if a limit is like a take profit. So for example, if I thought it was going to get back down to sort of this level, this, call it 6.25, I could put in a take profit at, oopsie, 6.25, just type it in, and it will tell you how much profit you take there, etc, etc. But I basically let my winners run and I cut my losers short. So I like to let things run. So even though I think it's going to get down here, I assess at the time. So yeah, Sol has been having troubles. I know everyone loves Solana, but it keeps breaking. And for me personally, on this trade, it was just a bounce off resistance. We see this big move into resistance, shorted it up here. Again, we should start to see a bit of a continuation to the downside, at least back to this previous low. So we're going to keep on riding that one out. Ape, that is a proper doo-doo coin in my opinion. Absolute Ponzi. But yeah, for me personally, I was shorting off the bounce of this, but really I want to see this level get absolutely busted and then further fall through. So that's Ape. Loop Ring, I haven't really got an opinion on this, but for me it was just a lovely trade to short it at the bounce off this resistance here, trying to get a move back down here. So and as I think all cryptos are going to be moving down, I want to see him move back down to the support of this, basically the beginning of this structure around 35 cents. So yeah, shorting up here is a nice risk to reward sort of play for me there. ENS, again today most of the trades are literally just really bog standard, nothing fancy, support and resistance plays, just shorting it at the bounce of the resistance, knowing full well it's going to get squeezed. So I probably will take a bit of profits a bit sooner than normal. KNC, let's have a look. It's this one here. This, in my opinion, is it's just broken base support. Look at that. That's a clear breach of support here. It tried to sort of do a Kobo to move up here, but the moment KNC reaches that level, ploppity plop plop, I really want to see sort of this sort of level over here, which would be quite nice. Yeah, remember when bars coil and you get a sort of a bunching up or a coiling, you see big explosive moves followed by that. So we should see a move down there. KNC, that trade's doing alright for the moment. And then Glimmer, again another bullshit coin. This is nothing short of it's a weird one. So the thing that does concern me is the flat top nature of this. I don't like flat top patterns anymore, they tend to get broken. But again, shorted it at the top, and with this we're seeing, I can't draw it because I'm using my mouse, but we're getting a bit of curved action over here. So typically curved actions or parabolic moves tend to go down, but this is not parabolic yet. So yeah, I think if anything, the move I would like to see is down to here, but we could get a bit of a fanning around before that happens. But anyway, we'll see what happens. I think I probably will start taking profits towards the supports at the moment, but yeah, let's just let these run. Now in terms of current trades, I know I sound like a perma bear, but I'm really not, because I've got 25% of my pot just sat there. Actually, I need to rebalance this 1 sec.